Hello and welcome to another episode of Full Court Finance here at Zacks. I'm your host, Ben Rains, and today we're diving into Salesforce and Square ahead of their quarterly earnings releases later this week to see if investors should consider buying either one of the tech stocks. But before we get into everything, I want to say, remember, if you have any questions or episode suggestions, please feel free to shoot us an email over at podcast@zacks.com. Also, make sure to subscribe and leave a review wherever you listen to your podcasts. And make sure to also check out our new Zacks.com/promo page for a look into some of our services, portfolios, and more. And quickly, before we dive into Salesforce and Square, we have to address the fact that the Dow, the S&P 500, and the NASDAQ all plummeted in early trading Monday, down over 2.5%, with the tech-heavy NASDAQ down over 3% before I came into the studio this morning. And meanwhile, the yield on the 10-year U.S. Treasury note fell to 1.37%, and gold prices hit a new 7-year high as investors continue to pour into those safe haven assets. The market pullback comes as the coronavirus spread outside of China happens seemingly more quickly. This includes South Korea, Italy, and Iran. And South Korea is a big export powerhouse, and the International Monetary Fund over the weekend cut China's annual growth forecast by 0.4% to 5.6%. And this comes about a week after Apple said that it expects to fall short of its quarterly revenue guidance because of declines in both production and demand in China. So obviously the coronavirus is starting to weigh a little bit more heavily on the market. And with that in mind, though, the S&P 500 did hit brand new highs just last week. So obviously this is kind of a fluid situation and things could turn around, but the coronavirus obviously is a situation that needs to be continually monitored, and any updates for if it spreads more quickly throughout other places besides China will certainly hang over the markets for who knows how long at this point, until we really have a sense of if this spread is going to come to an abrupt halt at any time soon. But I don't want to speculate anymore on the coronavirus and the broader market. We're going to talk now about Salesforce, and the stock was up around 18% in 2020. It was hitting new highs, but it's been hit pretty hard over the last several days as part of this broader sell-off. The stock was down 3.4% in morning trading on Monday, and this is heading into its Q4 fiscal 2020 report that is due out after the market closes on Tuesday, February 25th, so tomorrow. And in order to figure out what to do with Salesforce stock, we need to take a bit of a broader overview, and we're going to do that right now. So Salesforce is one of the largest enterprise application software companies by revenue in the world. The firm's cloud-based customer relationship management services offer clients a wide range of tools. This comes down to everything for sales and e-commerce to marketing and analytics. The company, San Francisco-based, one of the big tech companies down in Silicon Valley, it has over 150,000 customers worldwide. It's expanded partnerships with the likes of Amazon Web Services, and it's bolstered some of its offerings through things such as artificial intelligence, voice controls. And then last summer, the company made a pretty big splash when it completed its largest ever deal to buy Tableau. It was a $15 billion acquisition, which is expected to help Salesforce expand its data analytics business and help it become more appealing on the whole to enterprise clients in what has become a super highly competitive space. And then on their last earnings call, Salesforce and their executives continue to highlight what they call their Customer 360, which boasts that it's one integrated CRM platform for marketing, sales, commerce, service, and IT. So that's something to pay attention to on in any earnings call, is how that new highlight they're talking about that Customer 360 is their big offering, and obviously how Tableau is doing for them so far will also be worth paying attention to. And now we're going to jump into some more of the fundamentals before we take a look at what to expect. CRM stock is now up about 14% in the last year. So over the last 12 months, this lags its industry's 21% average climb and the S&P 500's 19% jump. So that might be somewhat surprising for a big tech name like this, especially as others such as Microsoft and Apple have all been on a pretty massive run over the last 12 months. And this could mean that the stock is due for a bit of a jump, and we'll see what happens. And we should note that on a broader scale, the stock had moved basically sideways from October 2018 until the start of 2020. It hadn't really done much. Obviously, it's still up big over the last 5 years or so. In the last 3 years, the stock is up 125%, which blows away its industry's 54% climb. This includes big names like Adobe, Oracle, VMware, Intuit, and others. So it's been the last year or so that's been a little more hard on Salesforce, and obviously that could set up a situation, as I mentioned, that sees Salesforce go on a bit of a run, and obviously Q4 could be, their Q4 report tomorrow could be maybe the start of that, or the continuation of the stock continuing to move sideways, or maybe even go down. And then on the valuation side, Salesforce continues to be the opposite of a value play. Even its PEG ratio, which takes into account growth, comes in above its industry's average. But we should note that investors and Wall Street have continued to pay up for Salesforce. They've been willing to pay for its growth and its growth story. So just obviously, if anyone's considering Salesforce, don't think of it as any type of value, even within a tech industry that's valuation is pretty stretched, which also includes Apple and Microsoft, and kind of the S&P 500 in general is a little bit stretched because of the likes of Apple and Microsoft at the moment. Now we're going to take a look ahead. So our Zacks estimates call for CRM's fourth quarter sales to climb about 32% to $4.75 billion. And this would roughly match Q3's top line growth. So that's always a good sign to see their growth continuing from what they did the previous quarter. And then for the full year, which is fiscal 2020, once again, their sales are expected to jump 28% to $17 billion. And then if we look ahead to the next year, this is just always helpful to give people a sense of this longer term growth picture. Salesforce is 2021 revenues are projected to climb another 23% higher to about $21 billion. And both of these figures would compare relatively well against recent growth estimates. And then we should also note that Salesforce is a company that likes to project longer term growth. It's a part of the reason why Wall Street's been so in love with the stock over the long haul. They project that they're going to reach as high as $35 billion in revenue by the end of fiscal year that ends in 2024, or that ends in January 1st, 2024. In last quarter, co-CEO Mark Benioff said in prepared remarks that they are, quote, now on track to double their revenue in 5 years. So that's where they're going. They're expecting to continue to expand as more and more businesses jump into this CRM digital transformation age that we're in. And before we dive into kind of a conclusion, I want to note what to expect on the bottom end of the income statement. CRM's adjusted Q4 earnings are in fact projected to sink over 21% to 55 cents per share. In this downturn, this expected downturn comes as its Tableau acquisition weighs on earnings, as it did last quarter as well. And for the full year, their adjusted earnings are still expected to climb about 5% and then climb another 7% above our current year estimate in 2021. So in conclusion, the firm, we should note that they've easily topped our quarterly earnings estimates in the trailing 4 periods by about 33% on average. So they have a solid history of bottom line beats, which is always a good thing. They currently have a Zacks rank number 3 hold heading into their report, but amid all of this market uncertainty, it might be best just to see how Wall Street and the big institutional investors react to Salesforce's report after the closing bell on Tuesday, because you don't want to, it's never easy to play a stock around earnings. So you don't want to go in expecting them to blow things out, and maybe they even do, but they have bad guidance. So maybe just wait next couple of days, see how the market reacts, and if you see some positivity coming back into Salesforce, might be worth jumping in, because long term Salesforce is that customer relationship management powerhouse. It helped popularize the industry. I mean, its ticker is in fact CRM, which is the industry that it operates in. That field is becoming more and more important as businesses, big and small, look to transform their operations for the digital and mobile age. So really, Salesforce, it's in their own estimates, they're expecting to double their revenue in the next 5 years. That it certainly seems like it is a solid longer-term growth play, but definitely be a little more cautious around their upcoming earnings, especially amid all of this current market uncertainty, at least the uptick in some coronavirus-based market uncertainty in the last few days. So now we're going to go ahead and take a look at Square. Shares of Square had surged about 35% in 2020 to crush its industry's 18% climb. So things had been going really well so far this year, but just like with Salesforce and many other big names, especially in tech, it has fallen recently, and it was down about 4.5% Monday morning. So now we're going to see what investors should do with the fintech stock heading into the release of its fourth quarter fiscal 2019 financial results, which are due out after the closing bell on Wednesday. So that's Wednesday, February 26th. And just like with Salesforce, we're going to take kind of a quicker, broader look at Square for maybe investors who might not know exactly what the company does. And Square began selling tiny smartphone, tablet-connected credit card readers back in 2009. And since then, the company has expanded its hardware and software offerings to attract not just really, really tiny micro businesses, but now small businesses and medium-sized businesses and even larger businesses these days. Its portfolio also includes business loans, debit cards. They now have a popular peer-to-peer payment app, which is the Cash App, that competes now directly against PayPal's Venmo in this growing peer-to-peer universe that includes traditional banking giants like JP Morgan Chase. Users can also even buy and sell Bitcoin on Square's Cash App. So their business is growing, and we're just going to quickly look at some Q3 metrics to give people a sense of just how large the company is. So last quarter, their sales were up 44% to $1.3 billion, and their gross payment volume, so just how much money is being processed across all of their various offerings, their gross payment volume was up 25% to just over $28 billion. So $28 billion of payments were processed on Square's various platforms. But Wall Street is a little bit worried about its slowing growth, and they do want to see some bigger profits. And this led CEO Jack Dorsey, who we should note does also run Twitter, to sell their Uber Eats competitor Caviar to DoorDash in late October for $410 million as they try to bring some more positive growth on the bottom line to their business and just get rid of anything that's not essential to what they see as their long-term growth outlook. And now we're going to quickly look at some of the longer-term stock price movement. So the stock is up big over the last 3 years. The stock's up 350% over the last 3 years. But we should note that over the last year, the stock's up just about 3.5%. So like with Salesforce, there's been some stagnation recently over the last year, even though all of these other big tech names have gone on an impressive run over the last 12 months. And despite this bit of a sideways movement, Square is still trading at pretty sky-high forward earnings valuations. And we should note, though, that despite those bottom line or their forward price to earnings ratios, that their forward price to sales ratio is coming down a little bit. They're trading at a discount compared to their industry. and they're also trading at a discount compared to their median over the last 3 years. So not super stretched valuation in terms of what people should be looking at for a growth stock like Square. And now we're going to go ahead and take a look at what to expect in not only Q4, but what to expect in 2020 as well. So for Q4, our estimates are calling for their sales to climb 27%, and this would help their full year fiscal 2019 revenues climb by roughly 36% to about $4.6 billion. And then if we look ahead to fiscal 2020, we're calling for another 23% growth to reach about $5.6 billion. We should note, and obviously Wall Street will be paying close attention, that their 36% growth that it's expected this year would fall well below what they did in 2018, which was 49% growth on the top line. And then obviously the 23% growth that we're calling for in 2020 would mark a big slowdown compared to that as well. But overall, the Square's sales grew just 30% in 2017. So this is not a crazy downturn compared to what they've done. 2018 was just a big year for them. And we should also note that as their revenues grow, those growth percentages, those growth rates are just a little bit harder to make. So the big thing you should note is that they're expected to make over $1.1 billion more this year than they did last year. And then from 2019 to 2020, they're expected to make another $1 billion as well. And then at the bottom end of the income statement, Square's adjusted Q4 earnings are projected to climb 43% to 20 cents per share. And then for the full year of 2019, they're expected to climb 66% to 78 cents per share. And then they're expected to climb another 17% higher in fiscal 2020 to $1.10 per share. So that bottom line growth is expected to be big this year and then continue again next year as well. And just like Salesforce, Square is currently a Zacks rank number 3 hold, and its earnings revisions have trended in the wrong direction heading into earnings. And I'm going to make the same comment I'm making about Salesforce as I am with Square. Both their stocks have moved sideways over the last year. 2020 had been strong for them, though. They both have solid longer-term growth plays, but I would definitely avoid Square heading into earnings, as you never really know what's going to happen, especially with the stock that's kind of been all over the place over the last several years in terms of what people think of it as a long-term investment. So maybe Q4 proves to be a great quarter. They provide great guidance, and then definitely be willing to hop back in some Square stock. But I would be a little cautious of the company as it's moved sideways for so long. In 2020 has already been strong, but obviously the market's down Monday, and we don't really know what's going to happen with the coronavirus. So I would be a little more cautious than even normally trying to buy stocks heading into earnings, but certainly pay close attention to both Salesforce and Square and see how Wall Street reacts within the next couple days, as both of those stocks could continue to be solid longer-term growth plays within various growth markets within that tech space. So both fintech and then that CRM business for Salesforce. So that does it for another episode of Full Court Finance. Until next time, I'm your host, Ben Rains. And remember, if you have any questions or episode suggestions, please feel free to shoot us an email over at podcast@zacks.com.